because it is, when you're in this space, it starts to feel like everybody knows about it. But then you learn when you take a step away from that immediate network of real estate people you hang around, really nobody knows what private equity and syndication even is.
There is a new American dream. One that doesn't involve working till you're 65 before you start enjoying life. If you're someone looking for ways to regain control over your time and check off that bucket list now, you're in the right place. We share tips from experts on investing, personal finance, and mindset so that you can finally have the freedom to work less and live more. This is the Freedom Investing Podcast with your host, Chris Toribio.
What's going on, everyone? This is Chris Toribio with the Freedom Investing Podcast, and I'm so happy you're here to join us for another amazing episode. If this is your first time tuning in, welcome to the show. Make sure to hit that subscribe button so you can stay up to date with our latest episodes. Moving on to today's guest, we have Luke Grieshop. Luke grew up in a small town in Ohio and moved out to Arizona in 2015. He started his sales career in the desert, and for the last 6 years has been managing sales teams at Apartment List, which is an online rental marketplace. Soon after being exposed to the multifamily industry, Luke began to learn how powerful real estate investing can be. He began his investing journey by BRRRRing single-family homes out of state, and then moved into passive multifamily investments as a limited partner. Today, he is a passive investor in 4 syndicated apartment deals. His main focus is helping educate his network on the power of real estate investing and to present opportunities that align with their goals. He does this by forming partnerships with best-in-class operators who have a proven track record of success in their respective markets. Luke, welcome to the show. Before we dive into it, give us a quick 2-minute rundown of who you are, your background, and where you are in your journey to achieving time freedom.
Thanks so much, Chris. I appreciate you having me. So that bio right there kind of helped set the stage a little bit. Basically, when I moved out to Arizona, started my sales career at Yelp and met a lot of people there. And naturally, when you get into your career and start to save a little bit of money, you're wondering what you should do with it. And the traditional path for everyone is just contribute to your 401k. And that was about the only thing I knew. One of my friends there, luckily, fortunately, I don't know without him if I ever would have started to look into real estate and alternative options. His family was in real estate, so he opened my eyes to that world. And so when he was talking to me about what real estate investing was, because I had no prior knowledge, I just jumped on Google and did a deep dive on what real estate investing was, how people did it, different methods. And in that search, naturally found bigger pockets. And so I went down probably a 2 to 3 year rabbit hole on consuming as many podcasts as I possibly could, reading books, trying to network with people, just really educating myself. And I would say about 1.5 to 2 years into that whole journey, I decided to invest in my first single family property in Columbus, Ohio. As you mentioned, I grew up in Ohio, so that felt like a good move, especially because with the money I was working with, prices were a lot more affordable than I could find here. And partnered up with a friend from college. He was a local realtor there in Columbus, so it worked out well. And then we grew that to 4 units at 3 houses and BRRRRed every single one of those, and it worked out well. And what I kept hearing people say is referencing about something along the lines of go bigger sooner. So around that same time, I had transitioned jobs to Apartment List, and I was already in the multifamily industry. And then it started to resonate on why people said go bigger sooner. And so I got a lot of exposure to the industry and decided that a good way to get involved in multifamily investing would be through a passive syndication. And so 1.5 years ago, I decided to make my first investment into a passive real estate syndication in the multifamily space. And since have done 4 total. And so that's where I'm at today. I'm invested in a few of those. And I'm also helping bring this type of education to my network because it is, when you're in this space, it starts to feel like everybody knows about it. But then you learn when you take a step away from that immediate network of real estate people you hang around, really nobody knows what private equity and syndication even is. So that's where I'm at today.
That's awesome, man. That's a really good experience. And it's always funny how, a lot of people who I have found that have transitioned into some sort of real estate investing kind of took a similar trajectory, right? It started out from some person that they knew that had some degree of success or knew someone that had degree of success. And then they ended up digging down that rabbit hole of going down the bigger pockets route, listening to podcasts, self-education, and ultimately jumping again, biting the bullet and investing for themselves, right? And so, in your case, you had a really interesting perspective because not only were you investing yourself, but you were also working in the industry as a sales consultant for Apartment List. And so, what were you seeing in your job that kind of also helped put two and two together and make sense for you?
That's a really good question. The when I first started out at Apartment List, one of my weekly tasks I was doing is cold calling properties and just going out and dropping in at a property man, at a community and talking to the property managers to share with them what we did. And in those conversations, I just started to kind of learn what this business was all about, that there was an ownership side, and then they hired property management. And I wanted to kind of learn how the whole business model worked. So there wasn't any specific moment that it clicked, or it was just really through learning that business model and going, I wonder how the ownership side actually owns these. And then I sort of started to learn about syndication and go, oh, it's everyday people like me who can actually get involved in investing and be an equity partner and own these apartments.
Very cool. Very cool. And so during this time, you obviously started investing in Columbus, Ohio. It's very close to your home market that you grew up in. You were familiar with the area. You knew someone who could represent you, boots on the ground. And so when you were BRRRRing these single family homes out of state, what was that process kind of looking like for you, being able to manage that from all the way in Arizona?
Yeah. So hats off to my partner, Ryan, giving him a shout out because he was able to help manage the entire process, being boots on the ground. Really, I was just there for phone calls, FaceTime, help, maybe helping vet out properties and find properties. For me, it was still pretty passive, but I knew there was another level of passivity that I could achieve because you're just dealing with so much more when you're directly buying the property. You have the realtor relationship, you need to go find debt, you need to do all these things. And I loved learning about that type of process, but I would love to partner with people where I can really be a limited partner or a silent partner. So really the thing that I was contributing most to our partnership was just capital. Because I won't go into kind of the terms or structuring of the exact partnership we managed to facilitate, but my biggest contribution of value in that whole process was the capital piece. And then he was really leading the charge with overseeing construction, working closer with property managers and that kind of thing.
Gotcha. Okay. So by the time your property, let's say you had one property that you were in the middle of doing the BRRRR, and the rehab was completed, you guys were in the process of refinancing. During the hold period, were you guys hiring a property manager, or was it the boots on the ground partner that you had that was also managing the sites?
That's a good question. It was interesting how we started to acquire them at the start. Property management was helping with the process because they had really good relationships with different contractors because they oversaw a big portfolio. So I believe our contractor did come from our property management company, but Ryan was really leading the charge in the whole thing and saying what needs to get done. So I would say he played a bigger role in that than property management did. And obviously in multifamily, when you pivot to something with a little more scale, the property management team really plays a large role in something like that.
Absolutely. That's definitely one thing to consider when you are building this portfolio, especially on the smaller side of the portfolio when you're just getting started. Is a lot of times, yes, you can hire a property management company to take over some of your properties, but at that point, you're still managing the manager until you can get to the point of scale where you have someone who's maybe there in-house 24/7, being able to take care of the day-to-days. So that's a really good insight into that
Yeah.
experience there.
And that's people, there's plenty, both of the companies that I invest with today are vertically integrated for the exact reason you just mentioned. You just have full control over what that process looks like, where the materials are, just the entire supply chain. You have you have a better grip on.
Absolutely. And so, how many properties did you end up BRRRRing out of state before you ultimately decided, you know what, I think going the syndication route and going bigger is actually going to be the better scenario for me?
Yeah, because you start to realize that it's much more economical to go buy a 100 unit apartment building only if you have a very small sliver of the equity than it is to try to scale 100 homes. It's just a lot of work, just a ton of things you have to that you have to oversee. And so we ended up BRRRRing 3 properties. And there was really no reason we didn't do a fourth. It was just we got to a point where we're like, okay, do we want to continue this? Do we not want to continue this? And we were kind of going in 2 different directions we knew multifamily was the next step. And as of late, he actually is now working for a commercial a commercial broker of some sort. I haven't gotten all the details, but I just started to realize that even after 3, I'm like, this is going to take a long time, and that the scalability and economics of multifamily just makes way more sense.
Fantastic. And so at that point, after 3 deals, you said, you know what, this no longer kind of makes sense, both from the return perspective and also potentially the time perspective that you had to invest in it. And so you then transition into jumping into a syndicated deal. And so what was that process kind of like? Because there's a lot of components to picking out which deal you want to invest in as a passive investor. Can you kind of outline the process that you took to kind of go through deciding which deal you wanted to first invest in?
Yeah, definitely. So the 3 things that people always talk about are sponsor, market, and the deal itself. And to me, and almost everyone I talk to, they would agree that sponsor is probably the most important component of those 3. Not that the other 2 aren't important, but it really comes down to the integrity of who you're investing in. And so Rise 48 Equity out here in Phoenix, they're a big name. And I was able to get in touch with Zach, their CEO. And what was awesome about Zach is that he took the time, almost 4 hours out of his day probably, to bring me to particular assets, show me the renovations, talk to me about the exact business plan happening at these properties. And he has hundreds of investors, and he made the time to do that for me. So I thought that was a really cool experience. I learned a lot. I got to know him over that 4-hour period. I mean, we were just spending time in his truck going to these properties. So that was huge. But then outside of that, just like the Phoenix market has all the things you look for, right? It's the population growth, job growth, the household income growth. It has a diverse job economy. It's landlord friendly. So I was comfortable with Phoenix, and then it just came down to the deal. Did the deal make sense? So that's the order I thought about these things in. And frankly, there's always things you can be learning. It doesn't matter what level you're at. I was pretty inexperienced when it came to evaluating a deal, and since then have gotten much better at what I can look out for. I'm even partnering with third-party underwriting at this point, just to vet out the deals, help me vet out the deals. We walk through them together. We talk about what stands out, not just for myself, but I'm doing that for my investors as well. And so some things to look out for on those deals are things like the debt terms, the assumptions. And if you're not sure about assumptions, you should talk to someone who really knows them in that market. But yeah, so that was sort of the process in general that I was thinking through in my head when it came to sponsor, market, then deal. I wasn't as clear on what the deal terms were at the time, but have since felt a lot better about those.
That's fantastic. And you bring up a really good point there in that you can leverage out certain skills that you don't necessarily feel the most confident in to people who do this day in and day out and really can provide you with that expertise, especially when you're going to be investing in maybe your first, second, or third deal, right? So
A
in
hundred
your
percent.
case, yeah, you hired out an additional underwriter to kind of make sure that the due diligence that you're performing on that deal was accurate. And I'm glad you talked about that because, there's a difference between analyzing a potential BRRRR opportunity for a single family home versus analyzing an opportunity of a 100+ unit apartment complex that's going to be held over a period of anywhere from 3 to 5 years, right? So that's a good insight there.
Yeah, definitely. I'll shout out RealVal. I have not worked directly with them yet, but I heard them on one of Reed Gooson's podcasts, and I sat down with them and had two separate phone calls, and they just have a really good operation going on over there. So if you want to link that to in your show notes or share that with the audience, it's RealVal.
RealVal. All right, we'll definitely make sure to add that to our show notes. Now, with that being said, you're at the point now where are you still working for Apartment List, right?
Yep.
And on top of that, do you still have any of those single family homes that you had BRRRR'd?
We held on to them, and I
Okay.
think they will be a long term hold. Well, maybe at some point in the future we would 1031 them, but for now the plan is to hold them long term.
Okay, perfect. So you have those single family homes, you're still working at Apartment List, and now you're invested in 4 syndicated apartment deals. Talk to us a little bit about like ultimately what your goal is like moving forward from here, and what is your life looking like now with all of these assets in your portfolio, compared to when you're just getting started.
Yep. So with the single family houses, like I said, the goal is to hold those longer term. I would say the I'm things are much more passive these days. We have the single family homes that are sitting there. They're kind of a well-oiled machine. We don't have to do much with those because the property management team takes care of just about everything we need. But the level of passivity that I have on the multifamily side has freed up time for me to just continue to go vet new deals. And that's the exciting part, right? It's like a new deal comes through, I can look at it, I can talk to the underwriting team about what they see in it, and bring these deals to my audience as well, and just deem if they're going to be well worthwhile deals to invest in. So ultimate goal though for me is like time freedom. I want to create as much time freedom as I can for myself so I can choose how to spend every single hour of my day the way that I want to spend it. We're actually expecting our first baby in a month.
Oh,
So
congratulations.
time freedom in the future is going to be very important. And not only for myself, but I want to help create that for everyone else as well. Because you and I were talking before the show, maybe even on the show, I forget at this point, but uh, the not a whole lot of people know about this world of passive syndications. They just think stocks and bonds. They think paper assets are the only thing you can be involved in. So looking forward with the portfolio, it's to continue to get as much passivity as possible through passive income. And I'm actually starting to look into other assets as well besides just multifamily. Multifamily fits I would say investors well who are looking for both cash flow and growth investments. But if your ultimate goal is just growth investments, maybe you should consider something like development. Or if you're just wanting to generate a lot of passive cash flow, maybe it's something like ATM investments. And so I think multifamily, there's a great hybrid there between the two. So it can be a really good thing to have in your portfolio if your ultimate goal and what you want to achieve is time freedom.
That's a really good point there because you're right. The return metrics will differ from asset class to asset class, and the most important thing I think is for people to be aware of is that there are alternative asset classes to the stock market, to bond market, and you can park your hard-earned capital into these other assets that can help you really achieve what you're actually trying to achieve long term, whether that be cash flow or growth. And so for you, I guess, when it comes to working with other people who are interested in investing in these alternative assets, what would be the first thing you would suggest for them to help educate themselves and get started with this?
So my whole world opened up when I went to a syndication event, and it was the Real Estate Guys Secrets of Successful Syndication, which I'm sure you're familiar with. And that was a little over a year ago. I attended that event, and I realized that in my head before I went to it, I thought that, oh, syndication, this is synonymous with multifamily properties. And then I learned that there's hundreds of assets out there that use syndication to purchase those assets and to invest in those assets. They just use the syndication model. Um, so I, given that, I have to give the best advice I could give is go to conferences to people and just go learn and network, and your eyes will. I mean, it's crazy what you can get exposed to. And another thing would be podcasts. I still listen to podcasts pretty much weekly, and you can learn so much from. It's like you're sitting in a room with two experts, and you get to listen to their conversation. It's a perfect way, if that's your learning style. It's a perfect way to learn. Conferences, networking, you know, those are a few of the biggest things, I think.
Yeah, absolutely. We always talk about, if there's something you want to learn about, put yourself in the room where there are a ton of experts in there and you are like the least smartest person in the room, right?
Yes, of
Because,
course.
if you're the smartest person in the room, you're in the wrong room, as we all say. And so if you can get yourself in an environment that's surrounded by people who are actually doing the things that you want to do, not only will it serve as a form of motivation, but it'll also serve as a proof of concept that like you can actually be successful at this, hearing about this from the stories of other people.
That's right. That's right. Yeah, your world opens up when you start to realize that people all around you just didn't know, but they're doing things like this. And so there's just a lot of power in hearing those types of interviews and going to local meetups even, and just meeting people. Networking is one of the biggest things you can do.
Absolutely. And you're going to find that there's so many ways to be successful in this asset class, whether it be, you can go to any given conference or any given meetup and find someone who invests in short-term rentals, someone who invests in midterm rentals, self-storage, land investing, corporate rentals. Like there's so
Yeah.
many different ways that you can leverage in this industry and in this asset class to be successful. And much of it just really comes down to what's your personal preference, what you think is cool, and what
Yeah.
fits your investment strategy.
That's exactly what it is. Going back to the passive income versus growth investing. If you want that, or you want a hybrid, there's a solution for everything.
Absolutely. So on that note, Luke, as someone who has gone through the active route as well as the passive route, what would you suggest to someone who doesn't know what it is that they want to go, which route they want to go, whether it be being an active investor or a passive investor? Is there any sort of insight that you can kind of suggest to that person?
Um, I think, and it sounds cliche because everyone will say this, but it goes back to what your goals are. If you look at what your goals are on a 10-year time horizon, and you don't see yourself in the corporate world, and you just want to be able to get out of that as soon as possible, maybe passive investing for cash flow so that you can build up enough to cover your expenses is the way to go. The other thing is, like, do you live, sleep, and breathe real estate? Maybe active is the route to go. And so I would say thinking about your long-term goals is really the most important thing to consider, because the last thing you would want to do is burn the ships, quit your job, decide to jump into real estate, and then realize when you're doing it actively, it's actually not what you want to be doing. So I would just get clear on what the 10-year time horizon looks like before you decide to go active or passive.
Absolutely. Yeah. I can't tell you how many times I've heard of people jumping ship, quitting their job, and like, all right, I want to be an active real estate investor. And now they can't even qualify for a loan because they don't have any streams of revenue that's
Right.
no longer coming in, too. That's another big component.
Absolutely. Yep.
Yeah. That's a good point there. All right, Luke. So we are coming towards the end of today's show, but before we finish, it is time for the Freedom Five. These are 5 questions that we ask every guest on our show, starting with the most important question: what is your why? What is the underlying motivation behind everything it is that you do?
I'm going to go back to the time freedom. I think that creating time freedom for my investors and myself, that's the absolute biggest thing. Because once you have time freedom and control over how you spend every hour of your day, then you can do whatever you're passionate about. whether it's you're spending time with your family or focusing on your health or, insert 100 other things. Maybe you love to travel. Time freedom to me and living a free life on your terms is the why. Not just for myself, but the people who I will work with as well on deals.
Love it. And the mantra of this podcast as well. I love it.
Yeah, freedom investing. That's right.
All right. Second question we had here. What book has had the largest influence on your life?
That's a hard question to answer. I read 1 to 2 books a month, I would say. And so no, I wouldn't say any stick out immediately as like that changed my life. So maybe this is some recency bias kicking in, but a couple months ago, I read Discipline is Destiny by Ryan Holiday. That book is excellent. And that was the first Ryan Holiday book I've read. He has like Ego is the Enemy and several others. I think he's written like 10 plus books at this point. Discipline is Destiny was amazing. The way I describe it to people, it's all about how to be a better person.
Wow, that's great. Yeah, no, it's really important because, there's a huge mindset component to achieving these type of goals, right? And a lot of times, there may be some sort of doubt or fear or some degree of uncertainty of what's to come, especially for a person who may be looking to leave that level of security coming from their W-2 job and jumping into this type of business where they truly don't know what the outcome is going to end up being. And that comes from establishing certain habits that you do on a day-to-day basis, certain ways that you approach life from a mindset standpoint, and certain people that you continue to surround yourself with. So that way you can really kind of give yourself the ability to take that best step forward in achieving this level of success. And I think investing in yourself and in your mindset is a huge thing.
I think the mindset thing, to me a few years ago, it was like, okay, I've heard enough about mindset. I get it. Like, and there's probably even a little bit of that today. But the one thing I'll say on mindset to comment on what you just said is, especially for people who want to go active, the mindset shift is very important because if you've never went into something entrepreneurial in your life or pursued an entrepreneurial endeavor, and you've been I've had jobs since I was 8 years old. And so I've my entire life been in an employee mindset, right? You have kind of a blueprint laid out for you and you execute on what you have to execute on, and then you get paid for it. Pivoting to being an entrepreneur is entirely different because there's no blueprint and you don't know when you're going to get paid. So I would say the mind shift is absolutely important.
Yeah, absolutely. Yeah, you're right. Because there is no blueprint, there's no one to truly tell you what to do, which, I mean, that's truly, if you think about it, that's what a lot of people are actually seeking, right? It's like,
sure,
I don't want someone to tell me what to do on a day-to-day basis. I want to make my own decisions. And then you jump into this entrepreneurial space and you realize, yeah, no one's going to tell you what to do because that's on you to kind of figure that out and make that decision moving forward based off of, the best information that you can position yourself to have.
Yeah, that's why the network becomes so important. You got to lean on other people who have done it.
Absolutely. Number 3, what is the most impactful thing, whether it's a piece of technology, a habit, or a person that has helped in freeing up your time?
That's a really good one. I would say, I don't want to be repetitive, but going out and building genuine relationships with people and networking as much as possible, because not only is that going to lead to answers to all of these unknown questions you're going to have in this world, but it also can lead to mentorships. I brought up Bronson before the show, and I don't know if Bronson would consider me a mentee of his, but I can tell you that he's opened my eyes to so many different things. He's always responsive. He was actually when I brought up the Secrets of Successful Syndication event from the real estate guys, he was the one person there who had talked to me about how to break into this kind of space and to focus on what you're really good at, and then going out to partner with other people who can bring their skill set to the table. So networking, go build relationships, try to get a mentor.
I love that. Yeah. And on that note too, once you're able to find someone who's achieved a certain level of success or a certain level of whatever that's defined to you, right? Whether that's a financial thing, whether it's a time thing, a lot of times you can replicate, as you said earlier, you can replicate what it is that they did and apply that to your own personal situation, so that way you can achieve that a bit faster. And that'll
Yeah,
translate to so much ROI on your time compared to trying to just figure it out yourself.
that's right.
All right, number 4. What is the number one piece of advice you would give to anyone else looking to achieve more control over their time?
Um, I know a lot of people probably say education, and that's one of the most important things. An answer I would give that may not be as much said, but it's equally important, is just create good financial habits. If you don't have a good foundation of financial habits today, especially if you want to be a passive investor, money is the only thing that matters when you're a passive investor. You have to have capital if you want to invest. And so to proceed that and to build a foundation, first you need good financial habits. So education, financial habits, network. Those are really the 3 recurring themes, I would say.
Yeah, that's a huge thing, Luke. And that actually reminds me, because, that's usually one of the things that we touch base on at the very beginning, right? Because, before you can get into any of this, whether you want to be an active investor or a passive investor, as you said, you have to have the capital to invest. And in order to achieve earning that capital, you have to have your financial house in order. So I guess really quickly, how did you kind of position yourself so that way you were in a financial position to be able to invest? And how do you continue to do that as your portfolio continues to grow?
That's a good question. Living below your means, I would say, is like the best thing I could say. Don't stop trying to keep up with the Joneses, right? Like, just because everybody else is doing a certain thing doesn't mean that you have to. And staying disciplined enough to more tactical advice I would give is that it would be very beneficial for you to sit down either with yourself or a spouse and evaluate where your money is going and what are the things that your money is going toward that make you the happiest and really move the needle in your happiness level, versus the things that you're spending money on that you don't really care about, but you just continue to spend money because of a habit or because you're trying to keep up with the Joneses or whatever the case may be, and scale back in those areas that you really know in your heart aren't moving the needle for you. And you can even then allocate some of that money to the things that are bringing you joy, but there will be a margin there. There will be a difference, and save and invest that. That would be some of the more tactical advice I would give.
Ooh, I love that. I love that. Yeah, we've recently been kind of cleaning out our closets. I'm not sure if you heard of Marie Kondo, but my wife Angela has been pretty big on that, and it kind of carries this very similar concept to your closet, because, as you know, there's many people who, including ourselves, who have grown to accumulate this huge level of amount of clothing that's in our closets, and it gets overwhelming. And it's just that one extra decision that you have to make in the morning is sorting through all of these different clothes that you have.
Yeah.
And picking what you're going to wear for the day, right?
Right.
And then you take a look at the inventory and you see there's still tags on some of them, and realize that you've never even worn some of these things. And the mantra behind that is like, you should be taking a look at each individual piece of clothing and see, like, is this something that continues to bring you joy? Is this something that you would continue to see yourself wearing? And if not, chuck it, donate it,
Yes.
and give it to a better purpose, because it's actually causing more strain in your life than it is a benefit.
Yeah, it's a cluttered mind, right?
Absolutely. All right, Luke, 5th and final question we have here. What is the best way for our listeners to get in contact with you?
So, yeah, thank you for that. The 2 platforms I'm the most active on would be Instagram and LinkedIn, and you can find me under Rule 72, RULE72 Equity, Rule 72 Equity on both platforms. And then my website is rule72equity.com, where you can download a free beginner's guide to multifamily investing. And outside of that, you'll find my phone number and my email. Reach out to me anytime. I like I mentioned before, networking and talking to people is one of my favorite things to do.
I love it. Well, Luke, tons of really great information today. I love how you kind of described your transition into real estate investing by first BRRRRing single family properties in the Cincinnati market, or was it Columbus?
Columbus, yep.
In the Columbus market, BRRRRing single family properties in the Columbus market, and then going on to investing passively into syndications. I love how you talk about the personal financial goals you kind of set for yourself so that way you can lay that groundwork so that way you can continue to have the capital to invest. And also like how you shared with our listeners how to vet out deals by looking for an operator, picking out your market, and picking out the type of returns that you really want to generate for yourself and your family. I just want to thank you again for being a fantastic guest on our show, and I really look forward to remaining in touch.
Thank you, Chris.
Now, if you like this show and want to learn more about how we can help you free up your time through passive real estate investments, check out www.freedominvesting.com. Make sure to subscribe to our monthly newsletter and schedule an introductory call with our team. We also have a free 7-day course on what passive real estate investing is and how to get started so that you can start your journey towards earning back more time in your life. To all of our amazing listeners here on the Freedom Investing Podcast, my name is Chris Tribio. Till next time.